Las Vegas condo market is the 13th most imbalanced among the 50 largest metropolitan regions in the country, according to Redfin.
Everywhere you look, the inventory is piling up. More than 2,300 units are sitting unsold, collecting dust instead of offers, a number that has surged 60% from just last year. That's not market noise. That's not a seasonal slowdown. That is what a cliff looks like in real estate terms. Properties that once had bidding wars within hours are now sitting for 2, 3, even 4 months.
No market for them. And they're having to make difficult decisions of either converting and pivoting to rental or just completely shelving the project.
Without so much as a single serious buyer walking through the door. Think about that for a moment. Las Vegas, the city where impulsive buying decisions are practically a sport, suddenly can't move condos that used to vanish in days. It's as if the entire pool of buyers evaporated overnight and left sellers staring at their stale listings, wondering why nobody is showing up. You can almost hear the anxiety in the voices of realtors who keep parroting the same rehearsed lines. It's temporary. The fundamentals are strong. Buyers will be back.
When it comes to real estate, traditionally, condos and townhomes are kind of the bellwether. Their prices and their sales drop first before single-family homes.
But even they don't seem convinced anymore. You can hear it in the hesitations, the awkward pauses, the careful phrasing. Because anyone who has been watching this market closely knows that inventory doesn't explode like this unless something is fundamentally broken. And if you think the inventory is bad, wait until you see what's happening with prices. The median price for condos slipped to $237,000, a number that sounds manageable until you realize that this median hides a collapse happening at the building-by-building level. It's like reporting that the average temperature of a city is fine when half the neighborhoods are literally on fire. Prices are dropping sharpest in the buildings that were once the stars of the Vegas skyline. Trump Tower with its gold-plated branding, Palms Place with its party reputation, MGM's signature with its flashy amenities. These buildings aren't just softening. They're slicing prices like a clearance sale, $50,000 cuts, $100,000 cuts, and still buyers are nowhere in sight. That kind of price action is not normal in a healthy market. It's the sign of sellers who need to get out now, not 6 months from now, not next year. They're watching their equity melt like ice on a summer sidewalk, and they're scrambling to cash out before the next wave of price reductions hits.
An owner in a downtown Las Vegas condo, the Ogden, was granted a special permit to use it as a vacation rental.
But what makes this unfolding collapse even more disturbing is the pattern. If you know Vegas, you know the condo market is always the first to crack, always. In 2008, it wasn't single-family homes or luxury estates that crumbled first. It was condos. They were the canary in the coal mine. And when that canary dropped dead, the rest of the market followed. Back then, some buildings lost 70% of their value. 70. Entire towers went into foreclosure. You could buy units for the price of a used car. And while nobody wants to relive that nightmare, the uncomfortable truth is that the early symptoms, the same symptoms that showed up in 2007, are flashing again. Inventory spike? Check. Buyer disappearance? Check. Cash-heavy investors unloading early? Check. HOA fees spiraling out of control? Check, check, and check. Ah yes, the HOA fees. The silent assassins.
Did you ever think that you get back into home ownership?
No, I didn't.
The part of condo ownership that most people gloss over until they get the bill and suddenly realize they're being financially waterboarded. In Las Vegas, HOA fees have gone from annoying to apocalyptic. Some high-rise units hit owners with monthly fees anywhere from $800 to $1,600. Imagine paying that every single month before you even touch your mortgage payment. That's $9,600 to nearly $20,000 a year, just thrown into a black hole labeled HOA expenses. And for what? For a lobby that smells like citrus? For a gym that hasn't been updated since the early 2000s? For a pool that half the residents don't even use? And it's not just the big flashy towers. Smaller buildings all across the valley are jacking up their fees by 20 to 30% in just 2 years. That kind of increase isn't just aggressive.
Just over 850 potential condo buyers in the valley, compared with almost 2,500 sellers, creating a 187% imbalance toward buyers.
It's financially devastating for owners who are already operating on thin margins. And this is before we even talk about special assessments, which are basically the HOA version of surprise medical bills. One day you're budgeting like a responsible adult. The next you're being told to cough up $5,000 for an elevator repair or $8,000 for roof work that apparently couldn't wait. Buildings like the Ogden, Allure, the Martin, places that were hyped during the boom, are now hitting residents with unexpected bills that make them question why they ever thought buying a condo was a good idea. These aren't optional. These aren't bills you can negotiate. You pay or you face a lien. And in Nevada, HOA liens aren't normal liens. They're priority liens. liens, meaning the HOA can foreclose on you even if you are current on your mortgage. Yes, you read that right. You could owe $400,000 on your loan, have never missed a mortgage payment in your life, but miss a few months of HOA fees, and they can take your condo and sell it at auction. It sounds outrageous. It sounds illegal. It sounds like something that shouldn't exist in 2025, but it does, and it's happening. Meanwhile, foreclosure notices are up 28% year over year, and that statistic alone would be concerning in a balanced market. But in a market where buyers have evaporated and inventory is swelling like a balloon,
we've got 7 months of inventory, which is insane. And we just don't have the buyers to absorb it. We haven't seen that much inventory in 20 years.
it's downright terrifying. High-rises are seeing some of the worst activity. In September, only 39 condos sold across all major strip towers combined. 39. Meanwhile, nearly 500 units sit on the market in the same buildings, waiting for buyers who simply aren't showing up. At this pace, it would take more than a year to clear current inventory if no new units were listed. But new listings keep coming. Owners are panic listing, trying to escape before the next price drop. And you can feel the desperation creeping into the market. Listings that used to use confident phrases like price to sell now sound like hostage notes. Motivated seller, bring all offers, seller highly flexible. Even buildings that used to be safe bets aren't immune. The Signature at MGM, once the darling of investors chasing short-term rental income, now has units sitting for months with barely any showings. Trump Tower, which wraps itself in an aura of ultra-luxury, can't move units even after chopping 6 figures off asking prices. Palms Place, the building that used to brag about its short-term rental appeal, sold only 4 units in July. 4. In a building with hundreds of owners. That's not a lull.
If you're a seller and you don't have something that's amazing, it's tricky and you gotta be realistic.
That's a distress signal, and everyone pretending otherwise is either clueless or lying. And for those who thought they could escape by renting their units, think again. The rental market is collapsing too. Vacancy rates valley-wide are near 10%, almost double what they were in 2022. Condo rents have been dropping for 6 straight months, and near the Strip, vacancy rates are hitting the mid-7% range. Long-term renters have options. Too many options. Nearly 12,000 new apartment units have hit the market in just 2 years, offering better amenities, lower fees, and move-in specials that condo owners simply can't compete with. 2 months free rent, no deposit, free parking, gift cards, broker fees covered. It's an all-out price war, and condo owners are losing spectacularly.
We've been looking for 5 months or so, watching the prices, seeing what they were going to do. So, and that's when we closed, was in July.
New construction has frozen to a near standstill. Developers, the same developers who built through downturns, who took risks on towers in weird locations, who bet huge on Vegas's future, have slammed on the brakes. Not a single major condo tower is planned. No groundbreaking ceremonies, no teaser videos, no glossy renderings promising rooftop pools and panoramic strip views. The pipeline is empty, and if you know Vegas, you know builders only stop building when they see a storm coming. Even the luxury market is in freefall. More than 100 condos listed above $1 million, and only 10 sold last month. Price cuts of $300,000, $400,000, even $500,000 are becoming common. The Waldorf Astoria, the crown jewel of the Strip, is seeing units listed at $3.5 million, quietly sell for $3.2 million, if they sell at all.
$2,500 plus a square foot, and appraisals are coming in at $1,900. There's gonna be like a cohort of investors that are gonna be scarred for a long time. They're gonna say, you know what, I'm never buying an investment condo again.
And the luxury buyer pool isn't just slowing, it's disappearing. High-end buyers don't like uncertainty, they don't like falling prices, and they definitely don't like carrying a multi-million-dollar asset that's depreciating month after month. Then there are the conversion buildings, the ones that were apartments originally, then converted into condos during the boom. These buildings are aging poorly. They're dealing with structural problems, plumbing failures, HVAC breakdowns, and costly repairs that owners are expected to fund. Special assessments hit year after year, and owners are reaching their breaking point. Many are simply walking away, choosing to abandon their units rather than keep pouring money into a never-ending series of financial black holes. Through all of this, the industry keeps pretending everything is fine. Median prices stable, single-family homes strong, the market normalizing. But condos aren't houses. They're leveraged bets on Vegas itself. And when the Vegas economy shakes, condos don't soften, they tank. The same ingredients that triggered the 2008 crash are back. Over-leveraged investors, shrinking rental income, soaring HOA fees, constant special assessments, and worst of all, no buyers.
He says the building needs to enforce its own regulations and the city should not be giving permits to owners here.
It creates a safety issue for the guests that are staying there, for the community around.
The California wave that once propped up demand has dried up. Tech workers aren't relocating, remote employees aren't moving, and their own markets are weakening. Without California buyers, Vegas condos lose their biggest lifeline. Investors are drowning in negative cash flow. Some own multiple units, each losing around $1,000 a month, stacking up thousands in losses with no escape. They can't sell without taking a beating, rent for profit, and can't keep up with the fees. They're trapped, and once owners feel trapped, panic follows. The psychology has flipped. 2 years ago, buyers were fighting over units sight unseen. Now, open houses are empty, sellers slash prices every 2 weeks, and realtors are begging for offers. The excitement is gone, fear has taken over, and fear spreads faster than any correction. And the recession hasn't even landed yet. Casino layoffs will come. Tourism is softening, conventions are down, gaming revenue is stalling. These are the dominoes falling in slow motion.